I'm going to be covering 5 different types of loans. Recently, I got asked, what are the most 5 basic or commonly used loans to purchase a home? So I'm just going to dive into it high level. I'm going to talk quickly about maybe where you can get this loan product or the best fit for the loan product. We're not going to go too deep into the details, but we are going to cover these 5. So the first is a conventional loan. The second is a jumbo loan. Third is government backed. Fourth is fixed. Fifth is an ARM, which is also known as an adjustable rate mortgage. So number 1, the conventional loan. This is the most common loan out there. It's probably the loan that you're thinking of most of the time when you hear mortgage. The conventional loan typically comes in 2 different flavors. The first is what's called a conforming loan, and the second is what's called a non-conforming loan. And so when we talk about conforming, we are talking about guidelines and standards set by the FHFA, the Federal Housing Finance Agency. In 2023, the conforming loan limit was $726,200 in most areas. And we have what's called a high balance, which is $1,089,300 in higher cost areas. So when a conventional loan meets those FHFA standards, that means it's eligible to be purchased by Fannie Mae and Freddie Mac. Those are the 2 largest government-sponsored entities that back much of the mortgage market. You might be wondering, what does that mean? So when people enter into mortgages, those mortgages get packaged together and sold as mortgage-backed securities. So Fannie and Freddie are the 2 largest buyers of those mortgage-backed securities. So the second type of conventional loan is non-conforming. So that means that loan does not meet those standards set by the FHFA, and that could be something like a jumbo loan. So maybe the loan amount is $1.5 million. Obviously, if the loan amount is $1.5 million, there's a little bit more risk to the person that's lending the money. So it's going to have more strict guidelines, or it might have a higher interest rate because of that additional risk for the lender. Now, typically with a jumbo loan, most of the time, the best place to get them is going to be directly through a credit union or a large bank. Chase, Citi, Wells Fargo, Bank of America, they typically are going to have the best pricing on those jumbo loans because they also want that borrower to be their banking client. So after jumbo loans, we have our third type, which is a government-backed loan. So what is a government-backed loan, and what does that mean? That means that there are government entities basically guaranteeing the return on these types of mortgages as long as they fit within the criteria. And so we're going to talk about 3 very commonly used government-backed loans. The first one is FHA. Many people think this is like a first-time home buyer loan. It really just means Federal Housing Administration. And it basically means that the Federal Housing Administration is the one insuring this loan. So you'll find with the FHA loan, many people have lower credit scores, you can have higher debt to income ratios, and you can often put, a lower down payment. However, with those increased risk factors, there is something called upfront mortgage insurance premium. So there are some additional fees that they bake in to compensate for the risk. The second type of government-backed loan we're talking about is the VA loan. This is one of the well-earned benefits for serving the United States. And this loan is guaranteed by the U.S. Department of Veterans Affairs. So that's why it's called the VA loan. There are 3 really great benefits of the VA loan. Number 1, veterans can put as low as 0% down. So they could basically be in a home with nothing out of pocket. Number 2, there's no mortgage insurance. So that will help the monthly payments stay lower. There's no mortgage insurance requirement at all. Number 3, there's no credit score requirement. The VA loan, one of the best loans out there. Obviously, it's a well-earned benefit. The third one is the USDA loan. So this is guaranteed by the U.S. Department of Agriculture, and it's really designed for moderate to low income families in agricultural areas or rural areas. So there are definitely some geographic requirements for this loan. And the great thing about these loans is also, once again, you don't have to have a credit score or a down payment requirement. And so I would say with all three of these types of loans, the FHA, the VA, and the USDA, to get the best pricing, you're either going to want to look at a local credit union, or you're going to want to go to a mortgage broker who can shop a huge list of different investors and find the best pricing for you. So the fourth and the fifth loan products are not necessarily specific loan products, but they talk about the term and the type of loan. And what I mean by that is number 4 is a fixed rate mortgage. So all that means is you're going to have the same monthly payment over 15 years, 20 years, or 30 years, depending on the term that you choose. Most commonly, we see 30-year fixed mortgages. And so the benefit of a 30-year fixed mortgage is obviously you can budget very easily because you know exactly what your monthly payment is going to be for the next, 15, 20, or 30 years. And the last type of mortgage we're going to be talking about, number 5, is the adjustable rate mortgage, the ARM. And so the ARM versus the fixed rate, the ARM will typically be lower and it will be for a shorter amount of time. So I'm just going to walk through an example of an ARM. It's going to be a 5/6 ARM. This is just for educational purposes. I'm just going to use this as an example. So for the first 5 years, you're going to have the same fixed interest rate and your payment will be the same. After that 5th year, every 6 months, depending on the economic conditions, that rate could go up or down. Most of the time it's going up. The benefit of the ARM is that it could be a lower payment up front versus the fixed, but then obviously after 5 years, depending on what's going on with the economy, that's going to be really hard to predict. That could completely change your monthly payment. So with this video, I just wanted to highlight high level 5 different loan products, right? And we're going to cover them again: conventional loan, jumbo loan, government backed loans, fixed rate, and ARM. If you have any questions about any specific loans or loan questions, email me at dscihomes@gmail.com.